We're going to jump over to our man, Teddy Kekstadt. We talk to him every Wednesday at 40 past the hour, folks. You can head on over to the front page of TFNN, right under the newsletter tab, the Tiger Forex Report, folks. It's only $97 a month. New issues every Monday. Updates throughout the week when warranted. You gain access to an archive webinar as well. It all comes with a 30-day money-back guarantee. You can't go wrong. Teddy Kekstadt, good morning.
Good morning.
So where do we begin in this market? I always check out your Tiger Forex Report, man. It's a great report Mondays. Folks, check it out. And I know, I was looking at the dollar, maybe testing some of those breakout areas. Maybe we start with the DXY. I know you say it's not indicative of some of those underlying pairings, but boy, we got some action in the dollar this week so far.
Yeah, we had an explosive rally on Monday, and we actually butted right up against our upside breakout line. This is the Forex Report. We fell off of it yesterday, and now obviously we're back lower on the week. Actually, we're pretty much almost where we ended the week last week, just a little bit lower, right around that area. So looking at it right now, it's like almost like nothing happened. But boy, on Monday was it ever a really big surge. So now remember, we've been talking about this, that the overall trend for the dollar index is lower, and the current rally that's going on right now should be viewed as a correction. That upside breakout level is just below our major monthly directional pivot level also. So that's a key area. I think unless we get a close above Monday's high, that may be the upper boundary of the range that we're going to set right now. I think that it's very unlikely that we're going to be able to sustain a trade above that right now. So especially with the interest rates pretty much in a sideways trend as well. So there's no fundamentals, I think, that could drive the dollar to really exacerbate a rally, if you will, to the upside. So I'd be very cautious. So I think you're going to see some buying opportunities right now in the euro US dollar and the pound dollar, as well as probably some selling opportunities in the US dollar yen as well. So which right now I would say with the US dollar yen, that might be where you'll get some of your best action over the next week or so, especially with the deals that are going on in the Middle East right now. I would say that probably not so much this week, but heading into next week, there's probably going to be some nice swing trades in the US dollar yen.
Nice. And I know I pulled that up, quite the movement, even from where we were at the beginning of the year. And then this bounce we have going on 140 to 148 and change to 146 almost as of this morning. What do you think about crude? The Middle East, of course, in focus, but really a lot of tech deals, everything going on. Not a lot of crude talk, but crude catching a nice bid off these lows right now. And what are we at? 63.30 right now. Well,
63.30, yes. That's another one too. I think it's in a range trade. I think at the most you might get it up to 65. I think you need a close or two consecutive closes above 65 to start worrying if it's going to push an upper boundary. And even still, I think that at most we get up to $71 a barrel, and I don't even see what would bring that on right now, to be quite honest with you. There's no fundamental or technical reason for it. The only thing that could impact gas prices, not crude, would be the fact that they're closing these refineries now in California permanently. That is going to impact, but that's going to be on the West Coast more than anything else. The national average will probably go uptick on that one. But crude oil prices are not, I can't see how there's going to be anything that's really going to boost them up right now, especially with these deals that are being made in the Middle East right now.
And what do you think about yields? You mentioned it, of course, and I know it's in the report in terms of where they are, maybe frustrating investors, but we have some negative action on price, a little bit of higher yield. 10-year, I think we're almost at 4.5 right now on the 10-year. And I know you look at the 30-year as well in your report. What do you think about yields right now, Teddy?
I look at them both. I'm watching the short-term rates right now, which don't really seem like they're sparking any real move. So, and I think it's more of a range trade. I don't think that yields have any real good shot at going higher by any real strong degree. I think the biggest drag that they have on them, the reason they're riding the lows in pricing, if you will, is the fact that the Fed hasn't done anything. The expectations, starting the year where there was going to be 2 quarter-point cuts. And now I'm hearing as much as a total of 1.25 points. before the year's out. I would not try and get too ahead of ourselves. Let's see them just cut a quarter first before we even start talking about going to over a full point. But the market right now is dictating that, hey, until we see any real reflective action, that yields are going to go lower because fundamentals, meaning a rate cut, we're in a range trade. So I think that you could probably still get a little pullback in yields, meaning higher prices in the 10-year. I'd watch the shorter terms. I'd watch the ones, the twos, and even the euro dollar. The euro dollar, not the euro dollar currency, but the euro dollar interest rate. If that really catches a bid, then I think you could start to see yields start to retract in front of the next Fed meeting, if you will. So, and I think that's going to be the real charting course with the yields right now. It's going to be a tough trade until the Fed pulls the trigger. There's just no real fundamental reason for it to break out either way. You know what I'm saying? Like to stretch yields to a higher degree, there's nothing that can drive that right now. If something comes in the market that's going to be like, hey, wow, this is going to really put pressure on yields no matter what the Fed does, believe me, I'd be the first one to jump all over it. But I can't even begin to fathom what it would be right now. So.
Hey, what do you think about gold? You talked about the yen, of course, and I know gold priced in dollars having a heck of a move today, man. Well off the highs, gold off by $51. What do you think about gold today? We got a lot of gold bucks, of course, and when we're below 3,200 now, a little bit of a pullback, 31.96. What do you think of that gold action?
I like that last swing high, and I like the new swing low. I look at it as a correction right now. I wouldn't get too crazy on seeing a sell-off. But you got to realize, look at the run in gold. There's got to be some profit taking somewhere.
Totally. You can't make money if you never sell, right? Quite a run.
Right. And look at the swings. Look at the volatility of the days that we've had over the past month and a half versus just going back 3-4 months ago. I mean, you're looking at some major range days. So there's got to be somewhere in that action, big money has to be taking something off of the table. So am I bearish? No, but I think it's just reflective. I mean, look at the spreads between gold and other metals. So I think you're having a rollover of profit taking from gold into some other metals overall, and unless you have a real reason to see a surge in gold, a lot of this was tariff related, and now all of a sudden the market's like, hey, the media is the only one crying about tariffs right now. As far as everything else is going, deals are being made and things are getting smoothed out. So, and the market likes that. The market pays attention to what's really going on, and I think that's where you're seeing a little bit fundamental and technical reasons to take some money off the table in gold.
Can't go wrong when that run, man. And whether you're talking the metals and the equities, my goodness, some of those equities as well. But boy, the pullback is fierce when you trade up to quite a number percentage-wise. Sure. Teddy, I appreciate the time as always. Folks, check out that Tiger Forex Report right under the newsletter tab. Teddy, have a great week, man. Look forward to talking to you next Wednesday as always.
Thanks, Tommy. You take care.
Thank you.